Hello, here is a detailed explanation of the Lumino Industries Limited IPO based on the presentation we prepared. Welcome to this overview of the Lumino Industries IPO. Lumino Industries Limited is coming out with a main board initial public offering of approximately 700 crore rupees. The issue opens on the 27th of August 2026 and closes on the 31st of August. The price band has been fixed at 78 to 82 rupees per share, with a face value of 5 rupees. The lot size is 182 shares, which means the minimum investment for a retail investor is around 14,924 rupees at the upper end of the price band. Shares are expected to list on both the BSE and NSE on the 3rd of September 2026. Let us look at the issue structure in more detail. This is a book-built issue comprising a fresh issue of 500 crore rupees and an offer for sale of 200 crore rupees. The promoters, Devendra Goel and Jay Goel, are the selling shareholders in the offer for sale portion. There is also a small employee reservation of up to 10 crore rupees. Key dates to remember. Anchor investor bidding took place on the 25th of August 2026. Public subscription opens on the 27th and closes on the 31st. Basis of allotment is expected on the 1st of September, with refunds in credit of shares around the 2nd of September, and listing on the 3rd of September. Now, about the company itself. Lumino Industries is a Kolkata-based integrated engineering, procurement and construction, or EPC, company with strong manufacturing capabilities. It manufactures conductors, power cables, electrical wires, and other specialized products used in the power transmission and distribution industry. On the EPC side, it executes projects in power transmission, distribution, extra high voltage substations up to 765 kilovolts, and has also diversified into solar EPC. As of March 2026, the company had a healthy order book of about 3,150 crore rupees, split roughly between 2,000 crore in EPC projects and 1,158 crore in manufacturing. The company is also looking to expand its export presence in markets such as the United States and Africa. Turning to the financials, in financial year 2024, revenue from operations was around 1,407 crore rupees, with profit after tax of about 87 crore. In FY25, revenue rose to approximately 1,918 crore, and PAT increased to 125 crore. For FY26, revenue stood at about 2,041 crore rupees, with PAT reaching 160 crore. This reflects a revenue CAGR of roughly 20% over the period, along with improving PAT margins from around 6.2% to 7.8%. The strong order book provides good revenue visibility going forward. What will the company do with the money raised from the fresh issue? Approximately 337 crore rupees, or about 67% of the fresh issue proceeds, will be used for prepayment or repayment of outstanding borrowings. As of July 2026, total outstanding borrowings were around 1,857 crore rupees. About 15 crore rupees, or 3%, will go towards capital expenditure for purchase of equipment and machinery, civil works and interior development at an existing manufacturing facility. The remaining amount, roughly 148 crore or about 30%, will be utilized for general corporate purposes within the limits prescribed by SEBI. Looking at the allocation of shares, up to 50% of the net offer is reserved for qualified institutional buyers, including the anchor portion. Not less than 15% is for non-institutional investors, or HNIs, and not less than 35% is reserved for retail individual investors. As mentioned earlier, there is a small employee reservation as well. For retail investors, the minimum application is one lot of 182 shares, costing approximately 14,924 rupees. The maximum that a retail investor can apply for is 13 lots, or 2,366 shares, amounting to about 1,94,000 rupees. Before the public issue opened, the company raised approximately 207 crore rupees from anchor investors on the 25th of August. Notable participants included institutions such as Citigroup, SBI General Insurance, Bajaj Life Insurance, Several mutual funds, including schemes from HDFC, Kotak, Motilal Oswal, and Bandhan, among others. This indicates strong institutional interest. To summarize the key takeaways, first, Lumino is an integrated player with both manufacturing and EPC capabilities in the power transmission and distribution space, backed by a solid order book of over 3,000 crore rupees. Second, the company has shown healthy growth, with revenue growing at about 20% CAGR and improving profitability margins, while also expanding into solar and export markets. Third, a major portion of the fresh issue proceeds is earmarked for debt reduction, which should help strengthen the balance sheet. Fourth, the strong anchor book from quality institutions is a positive signal. And fifth, the relatively low lot size makes the IPO accessible for retail investors. Please note that this is purely for informational purposes. It does not constitute investment advice or a recommendation to apply for the IPO. All figures are based on publicly available information from the company's filings, red herring prospectus, and news reports as of late August 2026. Investors should carefully read the full prospectus and consult their own financial advisors before making any investment decision. Gray market premium, if any, is only indicative and can change. Thank you for listening to this detailed overview of the Lumino Industries IPO.